So welcome you all to today's class. So last class we did various journal entries, a few journal entries around 18 to 19. So today we'll see one more journal entry. So that is related to purchase of accounts. Where is the pen? Okay, so here, purchase of accounts, you can see. The entry is for 1st March, machinery purchase for rupees 6,000. The transportation charges incurred rupees 500 and installation charges rupees 500. So in this transaction, machinery is purchased for 6,000. And with that, if there is any charges, so whenever you are purchasing any asset, okay, so whatever the charges like transportation charges or we can say installation charges, so that will be related to that particular asset only. So we will not give different entry for installation and for transportation, okay. So altogether it will be 6,000 plus 500 for transportation charges and 500 for installation charges. So that way, whenever machinery is purchased, okay, so the machinery is coming into the business, so it will be debited, machinery account debit 7,000 to cash account 7,000. Fine, understood? Okay. Okay, so today we'll do a new entry, that is your opening entry all about. Okay, so opening entry here, this is based on the accounting equation. So accounting equation is capital equal to asset minus liabilities. So here various balances are given here. Cash 10,000, bank 20,000, stock 10,000, debtors 5,000, sundry creditors 4,000, bills payable 5,000, loan from bank 20,000, building 50,000, and you are required to pass opening entry. So all these you have to identify. Cash, bank, stock, all these are assets or liabilities. Okay, so you tell me cash is asset or liability? Asset, yes. Bank, asset. Stock, asset, yes. Asset. Yes. Debtor, asset. Yes. Sundry creditor, liability. Yes. Bills payable, liability. Loan from bank, liabilities. Yes. Building, assets. Yes, you are required to pass opening entry. So how will you give opening entry here? So we have identified assets and liabilities. As I'm telling you from the very first class, assets are what balance? Debit balance. And liabilities are credit balances. So we will debit all the assets and we will credit all the liabilities, and whatever will be the balance, that will be capital. Okay, whatever will be the balance, that will be capital. So how we give opening entry, you can see here. So the journal entry is like asset account debit. So we will debit all the assets to liabilities account. So we will credit all the liabilities, then to capital account. So capital account here, as capital is not given, so we need to identify and we need to calculate whatever will be the balance, that will be capital. So this is the format of journal entry as I have taught you. So that is your date, particular column, ledger folio, amount, this is for debit, and amount, this is for credit. So whatever we have identified the assets, so that we are debiting, you can see cash account debit 10,000, bank account debit 20,000, stock account debit 10,000, debtors account debit 5,000, building account debit 50,000. Okay, and whatever the liabilities that we have identified, so we will credit that to sundry creditors account 4,000 here, bills payable account 5,000 here, loan from bank account 20,000. So when we are calculating, see all this, if you will add this 50 plus 10, 60, 80, 90, 95,000. So debit side is 95,000 and credit side you are getting 20 plus 5, 25 plus 4, 29,000. Okay, so when you will deduct 29,000 from all the assets, that is 95,000 minus 29,000, you will get the balancing figure. I'm writing with star, that is 66,000. So that will be the balancing figure, and we will write that balancing figure as to capital account. So this is called as the what? Opening entry. And the narration, this is called narration. So we're giving the narration being opening entry past. Fine? So you do this in your copy. Do this in your copy. Okay, understood everyone? Understood Rakhi? Jayashree?
Yes, ma'am. Ma'am?
Yes?
Ma'am, if there will be balance on debit side, then what we will write
Sorry?
here? So here, ma'am, here we write to capital account
Yes.
balance. And if there will be balance on the debit side,
So
then what we will write?
no, it has to balance. As I have told you that this is the accounting equation. So this equation is related to, okay, debit and credit. As I've told you, like for every debit there is a credit. For every debit there is a credit. So this is the journal entry all about asset account debit to liability account. So here the balance will come here itself. Okay?
Okay, ma'am.
Okay. Any more doubt? Okay, now the students can take out page number 33 from your study material, that is illustration 1. So from your study material, we are going to pass journal entries and post them into ledger. So page number 33, illustration 1. You will take out page number 33. So here we can see illustration 1, okay. The year is 2012, April 1. Mr. Bikas and Mrs. Vaibhavi, who are husband and wife, start consulting business by bringing in their personal cash of rupees 5 lakh and 2,50,000 respectively. Okay, so this is April 1. Here Mr. Vikas and Vaibhavi, so that they are the proprietor of the business. So they are the partners. Vikas and Vaibhavi, they are partners and they are husband-wives also. So they are bringing cash into the business. So that will be in the form of, we can say, capital. Capital that is given by Vikas and Vaibhavi. Okay? So Vikas has provided, he has invested 5 lakh and Vaibhavi has invested 2,50,000. So what is the total capital? So 5 lakh plus 2,50,000, the total capital is 7,50,000. So you can see here the journal entry, cash account debit to Vikas capital account 5 lakh to Vaibhavi capital account. So this is the format you can see in your study material, page number 33. So this is the format, being capital brought by the partners, brought by Vikas and Vaibhavi. Okay. Okay, so this one, Mr. Vikas and Mrs. Vaibhavi, who are husband and wife, start consulting business by bringing in their personal cash of rupees 5 lakh and 2,50,000. Okay, so here, as I've told you, the capital will be 7,50,000. Okay, Vikas has provided 5 lakh and Vaibhavi 2,50,000. Fine. So here journal entry will be cash account debit 7,50,000 to Vikas capital account to Vaibhavi's capital account. Fine. Now next one, April 10, bought office furniture of rupees 25,000 for cash. Okay, so office furniture is coming in. So furniture, it will be furniture account debit to cash account. Furniture account debit to cash account, that is 25,000. Okay. Now next one, April 11. Open a current account with bank of BB by depositing 1 lakh. Okay, open a current account. That means cash is going to the bank. Okay, cash is deposited. Cash in hand is deposited into the bank. Okay, what is reducing? Cash in hand is reducing, and what is increasing? Cash at bank is increasing. So here the journal entry will be bank account debit 1 lakh to cash account. So bank of BB account debit 1 lakh to cash account. So that will be your April 11. Now April 15, paid office rent of rupees 15,000 for the month by check. Okay, so office rent is paid by check. So that means the money will be going from the bank. Okay, and the name of the expense is rent. The name of the expense is rent. So it will be office rent account debit 15,000 to bank account, because here check is mentioned. Fine. Now next one, April 20, bought a motor car for 4,50,000 from Millennium Motors by making a down payment of 50,000 by check and the balance by taking a loan from HS Bank. So bought a motor car. So what is coming in? Yes, motor car is coming in. So motor car account debit 4,50,000. Okay, and what is the amount that is paid? That is 50,000. So that is by check. Okay, so we will credit bank account. Okay, and we have, the rest of the money. That is, what is the balance? 4 lakh. Okay, so 4 lakh is taken from a loan taken from HS Bank. So we will credit HS loan from HS Bank. Fine. So 50,000 is paid through own bank. Okay, so that will be from the bank account to bank account, and rest is the loan from HS Bank. So that is April 20. Anybody has any doubt? Anybody has any doubt?
No, ma'am.
Okay. Now, April 25, Bikas and Vaibhavi carried out a consulting assignment for AA Pharmaceuticals and raised a bill for 10 lakhs as consultancy fee. Okay, so Bikas and Vaibhavi, they have started with a consultancy firm. Okay, so their business is consultancy business. So they give consultancy services to others. Okay, so here in April 25, it says that they have charged from AA Pharmaceutical 10 lakh rupees as consultancy fee. So that means they are Vaibhavi and Bikas, they are getting money. They are getting money, 10 lakhs they are getting it. So here again mention AA Pharmaceuticals have immediately settled 2,50,000 by way of check, and the balance will be paid after 30 days. The check received is deposited into bank. Fine. So immediately how much money is paid? 2,50,000. So that is by check. So here it will be bank account. Okay. So rest that AA Pharmaceutical will be paying have not yet paid. Okay, have not yet paid. So we are to get 10 lakhs rupees as consultancy fee, right? So it will be consultancy fee account, debit or credit? Debit or credit? Fee is getting or giving? The firm is getting consultancy fee or they're giving? Getting. Then consultancy fee will be debited or credited. If it's debit, then it will be an expense. Right? It is not expense. They're getting, right? It's in? Yes. So rest of the money, that means 10 lakh minus 2,50,000. So that is 7,50,000 that AA Pharmaceutical will pay. And how much they have? They have received 2,50,000. Okay, so it will be AA Pharmaceuticals account debit 7,50,000, bank account debit 2,50,000, right? To consultancy fees 10 lakh. Now check it. Check it. Bank account debit 2,50,000 because they have received through check. Okay, and AA Pharmaceutical will be giving. Right, not yet paid, they will be paying. So we are debiting AA Pharmaceuticals to consultancy fee. So consultancy fee is an income for them. So that's why we are crediting. So that is April 25. Sorry? April 25. Understood? Any doubt? Anybody has any doubt?
No, ma'am.
Okay. Priyanka Singh, do you have any doubt?
No, ma'am.
Okay. Now next one, April 30. Salary of a receptionist at the rate 5,000 per month. Okay. So receptionist gets salary 5,000 and an officer at the rate 10,000 per month. The salary for the current month is payable to them. Okay. So payable, that is salary is outstanding. So it is 5,000 plus 10,000. So 15,000 is outstanding. So last class, I have taught you how to give outstanding, how to pass outstanding journal entry. So it is salary, so it will be salary account debit, 15,000 to salary outstanding account, 15,000. Fine, because 15,000 is yet to pay. Okay, so from journal entry, so here Mrs. Vaibhavi's capital account, we can see how we are posting into ledger. So what was the journal entry? Journal entry was cash account debit to Vaibhavi's capital account 2,50,000. Okay, so it is like here we are writing by cash account 2,50,000. So we are balancing by 2,50,000, 2,50,000, and the balance CD this side is 2 balance CD 2,50,000. So here also we'll write 2,50,000, and the next month, that is your, this was transaction for the month of April. So next month it is your buy balance BD 2,50,000. Okay. Now next one is furniture account. Okay. So furniture is purchase. Okay. The journal entry is furniture account debit to cash account. So as we are preparing furniture account, so we are posting here ledger as to cash account 25,000. Okay. And the balance CD will be this side. So this is in here it's written by balance BD, but it has to be balance CD. Okay, it is by balance CD 25,000, and this will be your balance BD 25,000. So here it has to be balance CD. Fine. So in the book, in furniture account, in the book it is printing mistake. It will be by balance CD instead of BD. Okay, so you write it by balance CD 25,000, and next month, that is April 1, it is to balance BD 25,000. Fine, so you rectify this. There is a printing mistake. Now next one, you can see here.
And can you repeat?
Yeah, which one?
And the mistake.
Okay, so furniture account, there is a mistake here, printing mistake. So furniture account, okay, in the debit side. So here you can see the journal entry of furniture account is furniture account debit to cash account 25,000, and the balance CD is in the credit side here by balance CD. So there is a printing mistake in the book, and here also it has to be by balance CD instead of BD. You rectify this 25,000 in the credit side, and in the debit side it will be same on 1st May 2022 to balance BD 25,000. Okay. Now next one, loan from HDFC bank account. Loan from HDFC bank account. So here the journal entry. What was the journal entry? Motor car account debit 4 lakh. Okay, motor car account debit 4 lakh. Loan is taken from HS bank is 4 lakh. Okay, so 4 lakh loan is taken. So here motor car account debit 4 lakh. So we are writing by motor car account 4 lakh, and balance CD is in the debit side to balance CD 4 lakh. So balance BD, that is, it will brought down to the next month, that is the first day of the next month, that is 1st May 2022 by balance BD 4 lakh. Any doubt?
No, ma'am.
Okay. Now, Avon Pharmaceuticals account. Okay, so AA Pharmaceuticals account. So from Avon's Pharmaceuticals account, okay, they are yet to get how much consultancy fee? 7,50,000. Okay. So what was the journal entry? Journal entry was bank account debit 2,50,000. AA Pharmaceutical account debit 7,50,000 to consultancy fees account. Okay, so how much money was yet to get from AA Pharmaceutical account? That is 7,50,000. That was the journal entry. So here we are crediting, okay, Avon Pharmaceuticals account. Here it will be, we are posting the journal entry here. In the debit side we are writing to consultancy fee 7,50,000. Because from AA Pharmaceuticals, that consulting firm is yet to get consultancy fee for rupees 7,50,000. Clear? Understood? Okay. So that way, whenever we will do various journal entry, first we will see what are the various types of accounts here we have found. So the number of accounts we will get, different accounts we will get, that we will prepare as ledger. So here in this question in the books of Bikas and Vaibhavi, we have got various accounts like cash account, Bikas account, Vaibhavi account, Bikas capital account, Vaibhavi's capital account, furniture account, then Bank of BB account, then motor car account, loan from HS Bank account, AA Pharmaceuticals account, consultancy fee account, salary account, as well as salary payable account. Okay, as well as there is one more, that is office rent account. So all these accounts has to be prepared and post them into the ledger. Okay, so in their respective accounts, okay, their entry has to be given. So that way we do journal entries and the ledger posting. Any doubt with ledger posting? Any doubt with ledger posting?
No, ma'am.
Okay. Okay. Today we'll do here from 1.6. You can take out 1.6, page number 37 in your study material. 1.6. So the chapter is cash book, bank reconciliation statement. Okay, so about cash book, already I have told you, right? So in the debit side, it is cash receipt or payment, cash receipt. In the credit side, it is cash payment, yes. So cash book is same like your cash account. So that's why it is also called as journal as well as ledger, yes. So here you can see any organization enters into numerous transactions during an accounting period, and amongst those, a majority of the transactions get settled, either received or paid, involving cash. For this purpose, a separate book of account is maintained for recording only the cash transactions, whether affected in liquid cash, check, or online transfers. So from this, we have understood that in the cash book, we record only the cash transactions. Okay, cash transactions or the transactions related to the bank or online transfer. Okay, only if money is received and money is paid. Okay, only paid, received, and the cash transactions and the bank transactions received and paid, that is recorded in the cash book. So the cash book of account that records all cash receipt and cash payment of an organization is referred to as cash book. So the receipts are entered in the debit side. This you underline, okay? All the receipts are entered in the debit side, and all the payments are recorded in the credit side, that you remember. Okay, so cash book is same like your cash account. In the debit side, we have a debit side, we have a credit side. And in the debit side, all the receipts are recorded, and in the credit side, all the payments are recorded. So that is all about your cash book. Okay, now features of cash book. Number one, you can see here in your study material, this is the book of account in which only cash transactions are recorded. So only cash transactions are recorded. All receipts of cash payments involving cash are recorded. Transactions are recorded in this book in chronological order. So that means date-wise transactions are recorded in the cash book. Now, point number 4, the pro forma of the cash book is similar to that of a ledger account, that is having two sides. Okay, it is similar to the ledger account. As you know the format of ledger, any account, so there is a debit side, there is a credit side, there is a date column, both in debit as well as in the credit side, and amount column. It is a book of account which is a book of primary entry as well as book of final entry. So, it is referred to so it is referred to as journalized ledger. Underline this. This is also referred to as journalized ledger. Okay, so this is, as I've told you, that this is also called as ledger, both ledger as well as journal. So it is called as journalized ledger. Underline this. Its balance reflect the balance of cash available. So whatever will be the balance, so that will be either cash in hand, okay? If it's like a single column cash book, cash in hand only. If it's a double column cash book, both cash column and bank column, then it is cash in hand as well as cash at bank. Now we'll see what are the types of cash book. Okay, so here first one is regular cash book, second one is petty cash book. Now we'll see what is regular cash book all about. So here regular cash book is classified into, you can see here the first one, single column cash book. Okay, single column. So that means you need to remember here there is only one amount column in single column cash book. You can see here date, particulars, LF and cash, that is in debit side. This is the format of cash book, same like ledger. Okay, so and this is the format of single column cash book. So here date, particulars, ledger folio and cash. Then in the credit side, date, particulars, ledger folio and cash. Okay, so this is called your single column cash book. This is the format of single column cash book. So here you can see in single column cash book only one amount column is maintained. So only one amount column here is maintained. Okay, only one column. Fine. So each side only one column for amount, that is cash and cash. Sometimes an organization having a bank account can also maintain a single column cash book and open a separate bank account in the ledger. Okay, now we'll move on to the next category of regular cash book, that is your double column cash book. So the name itself suggesting here double column cash book, there are two amount column, both in debit side and credit side. Okay, debit side we have two amount column here, you can see date, particulars, ledger folio and cash, bank. So this is debit side. Then in the credit side, date, particulars, ledger folio for amount column, for cash 1, for bank 1. So this is double column cash book where there are two amount columns, both the sides. Okay, so two amount columns are maintained by organization on each side of the cash book. This type of cash book is also called as double column cash book. Fine? Fine, understood? So this is the format of double column cash book. Now next is triple column cash book, TRIPLE, triple column cash book. Triple means what? 3. Okay, triple means 3. So one column, amount column is for cash, one is for bank, another one is for discount. So that is your triple column cash book. So here you can see in the debit side there are 3 amount columns, cash, bank and discount. In the credit side again 3 amount columns, cash, bank and discount. Okay, so here in the second paragraph everyone see the study material. there are two types of discounts. Okay, there are two types of discounts here. The discount column of the debit side of cash book represents discount allowed, and in the credit side represent discount received. Okay, so debit side it is discount, here it's mentioned discount allowed, and in the credit side it represents discount received. So there are two types of discount. You underline this, there are two types of discount in the second paragraph of triple column cash book: trade discount and cash discount. Okay, trade discount and cash discount. Okay, underline this. So the former discount, that is trade discount, is allowed by the seller to the buyer for making bulk purchases, while the later, that is your cash discount, is allowed to encourage the buyer to make prompt payment. Trade discount is not recorded in the books of account, and cash discount, which is recorded in the discount column of the triple column cash book. Okay, so what have you understood? There are two types of discount here. One is trade discount, another one is cash discount. And one thing you remember, we do not record trade discount. We record only cash discount. So what is trade discount all about? What is trade discount? Suppose we, as a business firm, we went to buy some goods. Okay, we want to buy some goods, or we have sold goods. Okay, you considered it, we want to buy some goods. So here it's mentioned the former discount is allowed by the seller to the buyer for making bulk purchases. Okay, so we want to buy, suppose bulk purchases we are doing, and the seller is charging, like they're saying, your total bill is 50,000. Okay, and we have asked for discount. And they're like, okay, fine, you have to give 45,000, no problem, 5,000 we are giving you trade discount. So that 5,000 is not recorded, because ultimately we are going to pay how much? 45,000. We are not going to pay 50,000. So that 5,000 is not recorded in the books of accounts, because ultimately we are yet to pay how much? 45,000. So here 5,000 is the trade discount, that is not recorded. And 45,000 we said we'll pay later. And if on 45,000 we are getting any discount while giving payment, suppose we have paid only 42,000 instead of paying 45,000, so what is the difference? 3,000. So 3,000 will be your cash discount. So cash discount is recorded in the books of accounts. That you remember, underline this. Okay? All the new students, trade discount and cash discount you underline, and you remember that trade discount is not recorded in the books of accounts and cash discount is recorded in the books of accounts. Okay? And cash, here you can see cash discount, which is recorded in the discount column of the triple column cash book. Okay? So cash discount is only recorded. Trade discount is not recorded. Further, it is to be noted that unlike the cash and bank columns, the discount columns are not balanced. So that also you need to remember. We balance cash column, we balance bank column, both the side whenever we are balancing, but we do not balance cash discount column, because one side is discount allowed and another side is discount received. Both are different. One is discount allowed, right? Discount allowed, that is like loss. Discount allowed is loss for the business, and discount received, okay? So that is the gain for the business, right? That is, we can say income for the business, right? So here, that you need to remember, in triple column cash book, the discount columns are not balanced. We balance only cash and bank column. Understood, everyone? Understood? Everyone is going through?
Yes, ma'am.
Fine. Here also there is a printing mistake in triple. Here it's written treble. Now move on to the next topic. So multi-columnar cash book. So this is a customized form of cash book that is maintained by organization where huge cash transactions take place under certain fixed heads. Okay, so this is maintained by some organizations which has like many heads, like clubs, schools, colleges, etc. maintain this type of cash book. The performer of the, so this is the format of multi-columnar cash book. The debits a date particular subscription. Okay, so if subscription that is received, donation is received from XYZ, when interest is received, miscellaneous income. Okay, so that is in the debit side. And in the credit side, the expenses can be salaries and wages, rent and taxes, communication charges, miscellaneous, different types of expenses. So that is your multi-columnar cash book. So this is the format of multi-columnar cash book. That means the cash book having multiple number of columns. Now, we will move on to next one, that is petty cash book. Okay, so petty means, what is the meaning of petty? Small. Okay, what is the meaning of petty? Small. So, in an organization, in daily basis, there are many small transactions or small expenses like everyday 2 rupees, 5 rupees expenses like for postage, for envelope, for pen, right? Coolie charges. So, what is it here? In organizations where the number of cash transactions are numerous. So, the organization who has number of cash transactions, it becomes tough for one personnel to handle and record all the cash and bank related transactions. So, organization having number of cash transactions, okay, one person find it difficult to record it. So, in that case, the cash handling is split between two groups. One group handling petty cash transaction and the other group handling the transactions other than petty cash. So this gives rise to a specific type of cash book called petty cash book. And the person who is handling petty cash book, that person is called as the petty cashier. Okay, the person like who is handling the petty transactions or the small transactions and preparing the petty cash book. Fine? Okay. So this book of account records only those cash transactions which are not of heavy amount. As I've told you, very small amount, 5 rupees, 10 rupees, 15 rupees. So the cashier in charge of the petty cash book is known as petty cashier. So underline this. The person who is handling petty cash book or the transactions, that person is called as the petty cashier. The cashier of the other group is called the principal cashier or chief cashier. Okay, so in this case, the petty cashier gets an amount of money from the principal cashier or chief cashier. Okay, the amount of petty cash is provided to the petty cashier either on ordinary system or on impress system. Okay, underline this, ordinary system and impress system. So what is ordinary system? Pre-decided amount of cash is given in lump sum. Okay, pre-decided. Suppose I am one of the petty cashier and one amount is given to me every month, first day of every month by the chief cashier. Suppose like 5,000 is given to me or like 1,000 is given to me, that you run the entire month with this money. Okay? Yes, fixed amount. So that's why it's mentioned lump sum. When the entire amount of petty cash gets spent, the petty cashier submits the details of the petty expenditure to the chief cashier for review and reimbursement. And whenever we talk about impress system, underline this. One is ordinary system, another one is impress system. The total amount of petty expenses for a particular period is estimated before in hand. And this amount is referred to as impress cash or impress float. The impress cash is advanced by the principal cashier to the petty cashier, out of which the latter meets all the petty expenses incurred during the period. At the end of the fixed period, petty cashier prepares a state of petty cash reflecting the petty expenses incurred and submits the same to the chief cashier. And the chief cashier, after examination of the petty transactions, remit an amount equal to the total petty expenses incurred to the petty cashier. Thus, at the beginning of the next accounting period, the petty cashier will have the same amount of impressed cash to meet the petty expenses of this period. Thus, the amount lying with the petty cashier will never exceed the amount of impressed cash. Okay? So here, a fixed, before in hand, a fixed amount is given by the principal cashier to the petty cashier here under impress system. The performa of petty cash book is exactly similar to that of a single column cash book. Some organizations also maintain the petty cash book in multi-columnar format. In such a case, the credit side of the cash book has pre-specified columns of the common expenses usually incurred by the organization. Now I'll show you various petty expenses. So this is this is triple column cash book question, illustration 2. Okay, so petty expenses can be, I have told you, it can be coolie charges, it can be envelope, right? It can be any transportation charges, it can be carriage, okay? It can be freight. So small charges, okay? Small expenses. So that is maintained by the petty cashier. And there are two systems. One is ordinary system, another one is impress system. Ordinary system and impress system. So today you have learned from 1.6, page number 37, 38 until 39, you have learned what is cash book, what are the features of cash book, what are the various types of cash book. Okay, various types of cash book is single column, where there is only one column. Double column, there are two columns, both the sides, cash and bank, cash and bank. Triple column, cash column, bank column and discount column. Okay, in the debit side it is discount allowed, in the credit side it is discount received. And one more column, that is multi-column cash book. Okay, where multiple number of heads, right? Multiple number of amount columns are written or recorded, we can say. Then another one is your petty cash book. Here you need to remember about petty cashier. You need to remember about two types of your petty cash book. One is your ordinary system, another one is impress system. Okay? And the cashier is called petty cashier and his boss is called principal or chief cashier. Okay. Well, that's all for today. Thank you so much.
Thank you, ma'am.
Yeah, thank you.